All right. Well, good evening. Welcome to another TNT session with yours truly, Mike Favors. You all, I'm pleased to be here with you. We got some great information that we're going to be going over tonight. And so, as always, when we get started, we just want to pray. Heavenly Father, we thank you for this opportunity to sharpen iron, to share. God, we ask that you would open up our eyes and our hearts to see these charts and to continue to do what you've called us to do, which is to take care of our home, the work of the ministry until you return. It is in the name of Jesus I pray, amen. All right, ladies and gentlemen, do you all have any questions as we get started on tonight that we might be able to answer? Any questions, first of all, that you all want to want to ask? Going once, going twice. Okay, all right then. Well, let me share my screen. And what we're going to do tonight, we're going to talk about trading plans. Now, I want to caution you all because tonight is a holiday. And I don't know if you've been paying attention to the markets, but the markets move exceptionally slow during these times, all right? So this is going to be a great time for us to get into some real mechanics of trading and what we need to do, okay? I think I might leave this open. Yeah, I might do it like that. I'll try and see what my screen says. All right, so at any rate, you all, a trading plan for beginners, I named it that because at the end of the day, some of us have been in this for a while, but we haven't necessarily engaged what a trading plan is and what that looks like. And I just thought it was something good so that it won't scare people away. If you go on the internet, you look this up, you're gonna find so many things, y'all. It's like many books written on the subject of trading plans and what it is and all of that. So I wanted to just keep it simple for you so you could actually engage it, start it, and implement it, okay? So with that being said, what is a Forex trading plan? All right, we got to identify what we're doing. So basically, an FX trading plan is a systematic method for identifying and trading currency pairs that takes into consideration, now, if you're taking notes, I want you to write this, a number of variables, including number one, your personality, number two, time, number three, risk, and the investor's objectives, okay? So then a trading plan is a researched and written document that, can y'all please put yourself on mute? I appreciate that. A trading plan is a researched and written document that guides a trader's decisions and approach to the markets. Now, let me explain to you what this really is. So when you're talking about your trading or your personality, we all have a certain level of personality. And trading, you all pull something out of all of us, because if you're impatient, you got to get patient. If you're too patient, you got to get a little aggressive. You see, if you are scared to take a risk, you got to take a risk. If you just quick to take a risk, you got to slow down with your risk taking. So it hits everybody, you all. But once you identify and get around it, we begin to make a plan that says, okay, my personality type fits my sleeping habits. That means you got to know which session you're going to trade, whether it's going to be Asian, New York, or London. You got to know your risk to ratio reward. How much are you going to risk with your account? And we're going to get into more of this as we get into this, you all. But I just wanted to put it right here. Everyone, if you're going to be a trader and you want to really make some money in the markets, I encourage you to get you a notebook, something that you just keep your plan on, because when you throw trades, you got to pay attention to what time you threw that trade, how long did it go in before it went into profit, how long did it move, how many pips did it move. Y'all, you got to start really organizing yourself. And first of all, your life should be organized too. You have to count them, but that's for another time. But you want to pay attention to your pairs, because when you get to know your trading pairs like that, you can then really start making money from those pairs, okay? So you want to write this trading plan down, write your objectives out, how much you want to make, so on and so forth, okay? So now, first thing we got to do is you got to ask yourself, what type of trader are you going to be? You got to really, I'm sorry, y'all. So I got people calling me trying to do three ways, y'all. I'm trying to tell you, this business is off the chain. Boy, I love this business. Man, okay, right there. If anybody, if you all really like this business and you see where we are, go ahead and put some ones in the chat. Let me just get y'all engaged a little bit, because I'm gonna tell you, that's why I get excited when I get on with y'all, because I really like and believe that we got something good here, man. I love the fact that people who are not in the company hit me up, even on Memorial Day, a holiday, talking about, yo, I gotta get with you. I see what you're doing. Okay, anyway. What type of trader you want to be? Well, in order to understand that we got to identify basic four types of traders, and there may be maybe one or two more, but these were the ones that I thought worthy or wealthy, to keep it simple, that will help you. So number one is scalper. Okay, number one is a scalper. Scalp trading, also known as scalping, is a popular trading strategy characterized by relatively short time periods between the opening and closing of a trade. All right. Now, day trading is also that's one of the two. So basically, scalping, you all, means that you're going to get in and you're going to get out, usually within 5 to 15 minutes, 20 minutes, and you repeat the cycle a series of times. Okay. Your scalpers are the ones that's going to get in and they're going to hit it as long as it moves. But when it get ready to turn or get ready to pull back, they're going to get out of it. All right. And we scalp well. I'm gonna be honest with you, okay? So that's the first one. The next one is day trading, all right? Day trading, or some call it intraday trading, but day trading is a popular trading strategy where you buy and sell a financial instrument over a time frame of a single day's trading with the intention of profiting from small price movements, all right? Now, here's the thing. Day trading is another short-term trading style, but unlike scalping, you are typically only taking one trade a day and closing it out when the day is over. So that means, imagine you getting up for the New York session, and you look at your trade, you do your markups, and you see that thing can run for about maybe 40, 50, 60 pips or whatever. You're going to leave your position in from the bottom, let it go 20, 30 pips, set a stop loss in profit, and then you're going to just leave it open and close it right before 5 o'clock when the market closes. That's day trading. And some people don't have the bandwidth because you're going to experience drawdowns and pullbacks, right? The next one is swing trading. Now, this is for the big boys. Swing trading refers to the medium-term trading style that is used by Forex traders who try to profit from price swings. It is trading style requires patience to hold your trades for several days at a time, you all. Now, swing trading stands between two other popular trading styles, which is day trading and position trading, which you see here on the screen. So swing traders identify a possible trend and then hold the trade for a period of time, for a minimum of 2 days to several weeks. Okay, so it is very much ideal for those who can or who cannot monitor their charts throughout the week or throughout the day, but can definitely have a couple of hours, analyze the market every night so they can throw the trade, make sure it's going in the right direction. I'm gonna tell you, when you really get into swing trading, it is money in it, because when you get used to having patience enough to look at them 4-hour chart and that day chart and throw a trade and let it stay open for 4 or 5 days or 2 weeks, you're talking about pips, man, hundreds of pips being moved. Now, the last one we have is position trading. This is the longest term trading and can have trades that last for several months to several years. Position traders ignore short-term price movements in favor of pinpointing and profiting from long-term trends. These guys, you all, they get thousands of pips, man. They have accounts, you all, that run a year. Can you imagine keeping a trade open all year long? Obviously, it all depends on your style. It all depends on your ability to hold your trade and see what you want to do with it, all right? So with that being said, you identify. This is very important for you to get on your demo and identify the type of trader you're going to be. Because when you do that, this lets you know how you're going to approach the markets, which means now this is the first step in identifying your trading strategy. Because if you're a scalper, then obviously you're going to need more time in front of the charts. If you're day trading or intraday trading, then you're going to set an amount of pips. You're going to look for a trade that will run that long. And once again, you're going to get out of the market. If you swing trading, or no day trade, you get in, set it out. But if you swing trading, then this is the one that you can throw, set it, and leave it be. for a couple of days. Now, the good thing about all of them is you can actually set it and do a take profit, and then you can walk away from it as well, okay? Now, here's what I do, and I want you to write this down. Number one, if you're going to be a good trader, you want to become a master trader, it's going to take some time. You're going to have to study, people. And when you study, you're then going to have to practice. You think about a doctor's office, or a profession is called a practice. You have to keep practice. And then after you practice, you go back and study some more. And then what do? You come back and practice again. After you get done with that session of practice, you go back and study some more. And then what do? You come back and practice again. Let me tell you something. I put a post up today that I saw from 2016 where it had my trades on there. And I was looking at my trades and I was like, man, you know what? I've been doing this for a while, y'all. I was hitting them markets back in 2016. It's like, man. But at the end of the day, that's because I study and I practice. I study and I practice. I study and I practice. When you study and practice, ladies and gentlemen, at the bottom of the screen, it causes you to get organized. When you get organized from your study habits and your practice habits, this is when you're getting ready to make a lot of money out of the markets, because you begin to increase your skill set, but most importantly, your vision changes. Now, I'd like to take a moment to talk about that if you all don't mind, because when you change your vision, your goals change. Now, if you don't know who this gentleman is, I encourage you to look up Alexander Elder, you all. Man, you're talking about some real talk trader. I think from Russia, was doing some things, went to medical school at the age of 16, graduated, you all, was on a boat. He was on a boat, a doctor on a boat that ended up jumping in and going to Africa and got asylum over in the US somehow. But this is a master trader here out of New York, you all, today. And he's written several books. I'm telling you, you need to look this dude up. But Alexander Elder once said that the goal of a successful trader is to make the best trades, y'all, and money is secondary. So when you say, well, what do you want me to practice? I don't want you to study and practice. Well, let me say, I ain't gonna say that, but what I do is I don't study and practice to make money when I trade anymore. I study and practice to make the best trades. That means I want to be consistent at getting 20, 25 pips out. Here's the reason why. If I can be consistent with that, you all, with them small lot sizes, as I increase them, that's when the real situation finna change. Because 20 pips, if it's a 0.02 or if it's a 2.00, is the same amount of pip movement. Now, if I get my laser sharp entry together, if I get my emotions together, if I learn when to hit that market when it's at the right point in time between our great trading strategy and style that we have, that we learned over here in our company of Tradera, while we can master this and get this down, you all, let me tell you something. Money will be secondary. You'll start getting excited, as I am. I get excited to see how many trades I can win before I lose one or two. And I'm gonna tell you, man, I have weeks where I go and maybe lose 2 out of 10 trades. Y'all, that's 80%. You don't hear what I'm saying? That's 80%. I know folk that can lose 4, 5, 6, 7 trades and come back and for the last 3 or 4, make everything back times 3. That's because, ladies and gentlemen, there's always a learning curve. So we want to be able to switch the goals, you all. Don't do it for the money. All right. We know we have money problems, but once again, we teach you mindset. We teach you leadership. We teach you paradigm shift and wealth engineers. And what I'm saying to you is when you can switch your goal and become one who want to see your trades do best, you become better teachers, you become better strategists. And of course, the money is a byproduct and it will come. All right. So now, I need you to realize this. Everybody say this with me. The demo is my friend. If you would just come off mute for everybody listening on YouTube, let's just bless them, everybody. Ready? The demo is my friend.
The demo is my friend.
Come on. Now,
Demo is my friend.
the demo is my friend. There you go. Now watch this. Why is the demo your friend? When you learn a new strategy, remember, we said practice makes perfect. But when you learn a new strategy, you test it out in the demo first, okay? When you get into a point and you just need to sharpen your skills. You sharpen your skills on that demo. When you go into, watch this now, if you see a pair moving or you see a pair that somebody call out that you like and you want to engage it, practice that pair on a demo for a few weeks before you start throwing live money so that you can pay attention to its movements, so that you can see what time of day does it run fast, how does it act during news time, how does it act when there's no news. You know, you want to pay attention to these pairs, and the demo is the place to be when you first starting out and you're doing that. Once you get confident with a pair, you get confident, you mark up some charts and you throw a pair in the demo and you see it play out, you get confidence, then I would suggest that you move, in fact, to the live accounts, all right? Demo is your friend. Now, here's the most important thing. You got to know what are your numbers. And of course, we're recording this so that you all can go back and watch this, because this is important for your trading plan. What are your numbers? Which simply means, what type of profits do you want to see? You want profits day, you want profits for the week, you want profits for the month. But what's most important now is that you realize that PIP profit equals money profits. So once again, if your goals is to throw a good trade, successful trades, then your profits will add. So if you trade for money, you just want to see money out the market, you're going to get your feelings hurt. But if you keep it to the pips and you learn how pip movement operates, then by product, you'll learn the money, all right? Now, let me just say this. My simple plan, for example, when I first started was something like this. Monthly goal, I want to do a 1,000 a month, 1K. So I broke that down into a week. What I got to do in a week? That's $250 a week. What I got to do in a day? $50 a day. Now, before I learned what I'm teaching you now about throwing trades and PIP calculation, I was just throwing it and looking at the dollars. But every time it would go up and go down, I'm emotional. Oh, man. So I found myself popping in and out of trades. Pop, 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 trying to get to it. Then I throw a trade, it go negative, I get out, then it shoot back up. Then I jump in, it pull back again, then I get out. I went through this whole emotional roller coaster, y'all. It was so draining. Oh, my goodness. It wasn't until I said, you know what? Let me stop paying attention to the dollars. Let me start paying attention to these candles. Let me start paying attention to candle formation, Candlestick Bible. Let me start paying attention to candlestick patterns and movements. Let me start memorizing what some of these Harambis and Dojis and Morning Stars and what these things mean as it relates to price reversal. Let me start paying attention to marking up charts in terms of channels, you all, and support and resistance, y'all, and some of the indicators. When I really started getting serious, y'all, oh man, it was game on. Because then I realized that in order for me to just get $50 a day, I just need to do 0.25. And if it moved 20 pips, that's $50. Well, here's the thing. So if the goal was $50 or 0.25 at 20 pips, then I could orchestrate that and rearrange that 0.25. So then I realized, well, I could throw a 10 here and a 10 here and a 5 here. It's in the same day. So then I could say, if I wanted to, I could throw a 10 in New York session for 20 pips. That's $20. I could throw a 10 in Asian session for 20 pips. That's $20. And then in the last 0.5 in the London. That's still one day, y'all. Or I could take a 0.10 and a 0.10, or I could take a 0.15 and let it run for 10 pips, and that's $25 or $30, and then do it again, 15, and be above a little bit. Or I could just get in there and just throw a 0.25 for 20 pips and be done with it. But I had to learn how to study a pair and watch that pair so that I could get in real laser sharp entries, you all. And that's when I learned about the 5-minute and the 1-minute time frames. Oh, yes. So if the goal is to get $50 a day, or whatever yours is, you want to know how many pips and then what lot size will move that amount of pips. And notice that's just one. So at 1K a month, $50 a day, 0.25. 0.25 won't really break you if you do it the right way. See, everybody want to try to throw a standard and a dollar, so they want to get to it fast. No, man, take your time and grow your account and do this next piece, which is this. Now, me, I'm gonna put this disclaimer right here. I'm a little more aggressive in my trading because I've been in this a while. But I'm gonna tell you right now, you're gonna definitely want to start and risk up to 1 to 3% of your whole account, y'all. So basically, if you got $100 in there, you should be throwing 0.01 lot size until you grow your account and know. But see, here's the thing: when you know your goals, then that's when you begin to get a little aggressive. So for some of you all, you may just want to start out and say, you know what, I'll be good with $100 a week. That's just $25 a day. So what do? You got to calculate that. What would that add up to be? $25 a day. All you need to do is like 0.5, or you could do 0.3, 0.5 and let it run for 20 pips, 5, 10, 15, or 10 pips. That'll be $10. So that means you're going to have to throw 3 positions of 0.5 at 10 or 20 pips in order to get to that $25. Or you just throw a 0.10 twice and let it run just a little bit longer than 20 pips, maybe 23, and you'll hit that $25 a day. So 0.10 twice. Or you could just get a 0.25 and let it run for 5 pips and be out the market in 5 minutes. It all depends on you and your ability. So here's what I did. For me, when I start these small accounts, and I'm gonna be showing you all in the back office, $50 account, guys, ladies and gentlemen, I started one because when you pull the market out, you also know what you need to keep in your account to keep doing what you want to do. So Mike Favors, if I want to do 250, for example, all I needed to leave in my account was $50 to $100. Because $50 to $100, I can easily turn that account to $300. Why you say $300? Because I need to leave 50 in there if I'm gonna take my money out on Friday so I can do other things with it, you know? So if I want to do 250 a week, I need to have at least 300 in there. So when I pull out 250. So I know with a $50, $100 account at lot size between 0.05 and 0.10, I can pull that off in one day. Because once again, if I want to do 250, then I'm gonna go do $50 a day, and all I need to do is do a 0.25. The way I trade with my leverage, I can do that and do that with no problem. So now, if you want to go, for me, when I get a $100 to $200 account, I can then stretch out from 0.10 to 0.20. All right, but that's me risking up to 10% of my account. But my trading style and my emotions, my personality can handle 10%. So if I have $1,000 in my account and I throw a size and a standard and it moved 10 pips, that's $100. That won't bother me. Most of the time it don't bother me, you all, because I grow account from $50. So if I grow account from $50 to $1,000, I'm not losing nothing, no way. It's all in the positive, right? So then but for you all, rule of thumb, in $300 to $400, 0.30, 0.40. Now, once again, you all, this is very aggressive. And when you start getting into these larger lot size, your account automatically starts off more in the red because you have to pay for the brokerage when you throw the account. You got to pay for those fees. So at the bottom, you see, I know my trading style is considered to be aggressive. You may want to only risk 1 to 3% of your whole account. So for every, I'm supposed to say every, not very. So for every $100, you throw a 0.01. So if you got 500, then you can throw a 0.05. All right. But the more and more your skill set increases, now remember, this is your account. You can trade it how you want to. We just want you to be very careful when you first start out so you won't be blowing accounts. And trust me, when I tell you all I've blown some accounts, I've blown some accounts and just shut down like, you know what, I'm done. I don't even want to see the market for another 2 weeks, man. I'm done. Like you blow 10 G's, y'all. You can't go tell the wife you did that. No, sir. You only tell her that after you've made it back. But anyway, y'all, prayerfully, hopefully you all won't do that because you're going to have a trading plan that fits you and you're going to stick to it. Okay. Now, discipline is your friend. And I'm almost done, ladies and gentlemen. I'm getting ready. As a matter of fact, this might be the last one. Yep. I'm getting ready to share something with you that is so important. All right. That's interesting. Getting ready to share something with you that's so important. Discipline is your friend as well. And when I say discipline, I mean the discipline to know when to take a break. If you trade and you lose 3% of your account, or say, for example, me, if I trade on a day and I lose 10%, I'm done for that day. I have to, because if I get back into the market and make a mistake and do what so many people do called revenge trading, you then abandon your whole trading plan. And that's how people get in trouble and blow accounts. You 10% for that day, that's it. And for me, 20% for the whole week. I mean, again, I'm done. If I lose 20%, I'm done. If it comes Sunday or Monday and it's down 20%, then I got to leave the markets alone for the whole week and go back to the drawing board because I've done something wrong. Now that's me. But I don't lose 20% of my accounts. You understand what I'm saying? I don't know. Don't do that. I've been doing this too long to do that. Why? Because if I throw a trade with a large enough lot size, and even if it go in the drawdown, you all, my entry point was wrong. That means I did something wrong, because when I enter the market no less than maybe 5. But see, when you enter on a 5 in a minute, it goes automatically right into profit. So when you learn this skill and you learn the strategy, your drawdowns are minimized greatly. So if I enter into a trade, I don't look to go into the negative 20, 30. What? I wish I would let my account stay open for negative 20 pips or go into a drawdown of 20 pips. That means you got into the wrong, that means the market changed and you got into it the wrong way, which inevitably means we did something wrong. We got to go back to the drawing board. All right? So discipline says, know when to take a break. When the market is choppy, when it's around certain holidays and stuff like that, you can't trade everything, you all. You got to learn how to take your break and learn how to just go back. That's when you study. So when the market is good and everything is flowing, you practicing. That means you trading. When it's not, you leave that market alone and you go and study. Study your patterns, study your candlesticks. Study, ladies and gentlemen, means to get back on your demo. Get back on your demo, all right? So therefore, if you want to become a great trader, get your trading plan together. Now, this has been my trading plan. That's what it looks like, all right? You go through here and you get everything situated. You study, you practice, you identify what type of trader you're going to be. You get on your demo and practice it. You know your profits, you know what numbers you want to make, and you make your plan and you stick to it. You find that 1 or 2 currency pairs that you're going to study so that you can get this type of movement out of the markets consistently. And you be disciplined enough to know when you hit your goal for that day, for that week, then you leave it alone. I've come in on sometimes on Monday and Tuesday in the Asian session and got good trades and just hit my whole, and sometimes double my account and just get my whole profit for the week. Y'all, I don't get back in the market just because somebody say, ooh, take a look at this. Ooh, take a look at that. No, I'm sorry. That currency pair or that move is making, that's good, but that is not in my trading plan. My trading plan says I trade these 2 currency pairs at this particular time. So I'm happy that you're making money during your time frame, but I'm also happy that I'm making money, because any day you make money is a good day. Any day you don't lose money is still a good day. All right. So with that being said, are there any questions, comments about anything we just went over? Oh, I didn't see all y'all on here. Any questions or comments, you all? Trading plan, you got to have one. All right, so then here it is. As always, I already said that the markets are moving slow. And so we're going to take a look at one. And if you got a currency pair that you'd like me to look at, please put that in the chat. Who's on here with me tonight? We're going to ask if somebody would monitor that. And let's pull up some trading view and let's see what we're looking at tonight. Let me ask you all this. How many of you all saw value and got value? Put some, if you got value from the training, put some 5s up in the chat for me. Put some 5s in the chat if you got some value from that training.
Andre would like to look at
Okay, I see that. Okay, good 5s. I see some 5s. All right. Thank you. Okay, cool. And that made it worthwhile, y'all. All right. So as always, AUD USD is on. I will tell you, I am already in this trade. This is one of my trades. Y'all know one of my pairs. But let's take a look at it. Let's do what we do. So we know what is the first thing that we do when we come in here. Y'all can come off mute now. Let's get it. Obviously I've marked this up already, but what's the first thing we do?
Top down.
You
Top down.
Lose, then top down.
What was that?
News, then top down.
News, then top down. Y'all please get accustomed to doing that now. That's a good point. News, Forex Factory, which I've already looked at. No reds for today. It was one, I think, but it happened around maybe earlier. And we don't have any more news until tomorrow at 5 p.m., which is CAD and NZD. All right. So now we got a little news, not too much to worry about. We now then go to our chart. And as you can see, I've already been in this one. And so what do? We do our top-down analysis. Now, I'll start with the day because it's just good to do my overall trend, and you all see that. And we pulled from the lowest. We got our trend line. I'm telling y'all what to do. Okay. So after we do, in order to do the top-down, what's the first thing we do? We find our daily what?
Support and resistance.
All right, we got some traders on here tonight. We find our daily support resistance. So for me, I use the blue line right there, you all. Some people, you use the rectangles and stuff. I do that on some chart. But for this one, y'all have had this chart marked up for days, maybe even weeks now, really. So there's my blue lines for my major support and resistance. And what's next after we do that?
Check trend.
Yeah, trend lines. Check trend.
Check the trend. So what, this is so easy because I already have it, but what direction is the trend line? What type of market are we in?
Bullish.
Bull.
We in them bulls. All right, so we pull the trend line from down here up to here on the day chart. Now what's the next thing you want me to do?
Check to see entry points.
Major, minor support and resistance.
That's right. I'm clearing it out because y'all be cheating. So we do this by what? We got the day chart for the overall piece. We got a good trend line there, you all. We got the most recent low, the most recent highs, all right? So then we'll go down to the 4-hour chart on AUD. It's the Asian time frame. It's 8 o'clock, so we know a move is, well, I know this because I studied this pair. We know a move is getting ready to go down.
Right.
Okay, so 4-hour chart, what are we looking for? Number one, we want to clean up anything that we've done as far as our trend line go, and I think I drew that perfectly. Is that right, y'all? And of course, we had some other trend lines. You can draw as many trend lines as you need to make sure what you're doing, but I think we did. It was a nice pullback right there. All right, so somebody said we need to draw some more minors SNRs. Is that right?
Correct.
Definitely see one right there. And I use red on my chart. Of course, you can use the color that's good for you on yours. I see another one right here. And I need to clean that up a little bit though. Let me see something. There we go. It's more like right there. What y'all say about right up in there? Yeah, touch right there. That's a weird one too. Look at that. Okay, I see that. Anybody see anything else before I leave this one? This time frame?
I do see a W formation. I don't know if that's important for anything right now.
Oh, yes, of course. Yeah, you see, if you'd have caught that move right there, that's just a great eye, y'all. But once again, those candlestick patterns, y'all see that?
Yes, sir.
Now, the question is, would you have been able to recognize it if you didn't see all this to the right? So I'm saying, if you only saw this, how would you know what's getting ready to happen? See?
That's a good question.
Well, that's the reason why we look at our S&Rs. Because you know when price get back down, it's going to either do one or two things. It's going to make a good candle and bust through, and it's no longer support, it becomes resistance, or it's going to bounce off the support and go back up, which is in fact what it did in a major way, didn't it?
Mm-hmm.
Yes, I am. Okay, I was talking late favor, y'all, excuse me. All right, so now what we do now is we're going to go down to the 1 hour chart. Open that up a little bit. Okay, what do you see now? That opened up a lot right there, right? What was going on up in here?
Consolidation. Exactly what you're looking at.
This whole, all of this. I'm looking at how it touched right here, came down and it did a fake out, came down and then blasted down a little bit. Then it came through right here and broke through, but then it came right back down and broke through, and it came and did a fake out. Right here, faked out, right there, faked out, then came through again, but came back down, then respected it, respect, then turned down the other way.
Is that a head and shoulders?
It definitely had shoulders, but at the end of the day, what I want you to see and realize is that right here, and you see here, I'm showing you this to show you that this is a major minor support and resistance line.
Ah, okay.
You see, you got 1, 2, 3, 4, 5, 6, 7. You got too many times it respected that whole zone, and it didn't take off like that. I've been waiting on this to take off, but too many times. So this is a strong one here, and then this line right here is strong because it just came back and tested right here. So now that's on the 1 hour. So we see this. Of course, we got this line up here. Let me put one right there just cause. And now Rock, we want to look for an entry. So some people drop down to the 15.
Yes, sir.
And now go down to the 5. But even on the 15, what are we looking for to enter, y'all, to enter? Start with a C. Say it again.
Is it confluence?
Yep, and confluence is basically what?
Information or proof that it's moving in a direction on it.
Which is confirmation.
Yeah.
All right, so first thing we do, since we have ours, is what? I'm intraday, and I use a pivot strategy, so I'm looking to see where is it at and relate to my pivots. It's in the middle, right? Now, for me personally, I don't trade when it's in the middle like that. So I'm going to want to wait to see if it's going to pop up here, to look for another sale, or if it's going to go through here. Oh, man, I'm just giving it away. I just gave it away, boy, I tell you. I just gave all the good beans away on that one. All right, so who would have tried to jump in this right here for a buy?
I would have last week.
Come on now. That's what I'm talking about. But now you wouldn't jump in it. Why? Because we have our first confirmation that it's not worth the risk.
Right.
Had it been down here, and of course this is the pivot strategy. And we know from learning in our back office that, you know, it may still go, but the risk of it is it could go either way.
Yes.
You see? So we have to be patient, and we got to sit on our hands, as Coach Max said. We got to wait, y'all. Now, that's the first confirmation. That's the first confluence. What's the next one? 15-minute chart. It's right between there. But we got this awesome scanner, right? Now, what does the scanner? We got this 50 EMA right here, this blue EMA. Let me open this up for y'all a little bit. No, wrong way. All right. Now that's 15-minute chart. Now, if you would have got in, you see what it's dancing? Because why? On our scanner, we have a minor support and resistance right here. That's what this red line is. You see? Got another one right here. I wouldn't mark both of these so close, but you know, that lets me know between here and here is a zone. Y'all see that?
Right.
So now look at what it's doing. He's playing games with you. He's trying to trap somebody. So now what do? We say, okay, let's maybe drop down to the 5 minute to see if we can get a more sniper entry. Now,
You still can't tell. Or at least I can't.
no, you can tell.
It's still dancing around right in the middle. It's still not doing anything.
Which means what?
You need to wait, actually.
There you go. That's exactly what that means. So what do we want to see with this right here? Let's go ahead and just put something. We want to see if this comes from right here. We want to see it go, at least for me. I'm going to want to see if it's going to come up, do this, come back down a little bit, and then bust through that pivot line right there. That's what I'm looking to see.
So that's like a 20-minute interval right there?
We don't nobody know how long that's going to be. Because the market moves how it moves, but it could be a jaded line like it won't be this straight, in other words. If it was that would be 15 minutes, but it could take an hour because it could teeter-totter like it's doing and form another and teeter-totter up. We've seen that, right?
Question, how do you have your pivot set up? Because there is a spot where it say 15 or 20. I know you put it on daily, and then it's another box. It has numbers in it.
I don't know about all that, so I'm gonna be honest with you. I know what I know, and I keep mine on daily because, once again, this is a strategy that they taught in the back office, and so I trust the tutelage of our great founders of this awesome company. If they say put it on daily, I'm gonna keep mine on daily.
Oh, no, it's on daily, but if you look at it, it's still another, I don't know what that box needs to be on. It says, I'm going to it now. It says pivot time frame daily, and then it says number of pivots back on the inputs. Yeah, that bottom, what do you have yours on? 20. Oh, okay, that's all I need to know.
Okay.
Cause mine always pop up as 15.
Okay, yeah, I leave mine and I save it just like that. I guess I need to check into that. There's something I might need to know, huh? All right. Okay, so for me, on 15-minute chart, you all, this is what I'm looking for. Now, here's one thing about this piece, though. If we measure this out and we see where price is right here up to here, that's only 9 pips, y'all, right? So we want to see if it will break out and move up here, which is a 20-pip move. That would be worth it, okay? Now, as price pulls back, you could possibly catch you an entry as price is pulling back, depending on if you want to take the risk and jump into this trade tonight. Me personally, I don't see enough momentum, and I trade this one.
Yeah, I was gonna ask, do you feel like it's enough because of the US? Is it enough to get it there? Like, and then how would you like, what's the strategy to be able to know that? Or we just don't know?
For me, once again, from where I am right now, it's a holiday. You know what I mean? I believe it'll pick back up, but once again, sometimes you got to look left to know what's going on. The market often repeats itself. And once again, even this line right here concerns me. So let's go back and look at that one right there. It didn't go past that one. So what's up with that line? Why is that line so important? When last time it been over there? It hadn't crossed that line, you all, since March.
Right.
And then even when it did cross, it didn't stay up there long. It went back the other way again. So now we see it come down from way over here in February. Y'all, that's right around when Corona was hitting. Y'all see that?
Yeah.
So now if we go to the day chart, which we're gonna get a better look at it. You see what it's doing? It's on a vicious down. So to answer your question, this is a change, of course, but I need to know and see if it's gonna go bullish and really break out to the major support right here, which is the most recent, or if it's gonna come back down and do one of these numbers.
Right.
You see? Now it hadn't been that low in a long time. As you can see our markups right here, they still go back. Look at that. It hadn't been past that point since 03. Y'all see that?
Mm-hmm.
It's a long time.
So would that be confluence that it probably, like, I know we can't base it on probables, but would that be a sense of confluence since it's been so long? Since it's been since 03?
Yeah.
Okay.
Me personally, I'm be looking to see, okay, it's hit that low and now it's on the up. And
Right.
I would want to see this continue to really go on up. But once again, I've been hoping and waiting for it to bust through here, even when it was right here. If it busts through this right here, we're going to go ahead and see it go. If it don't, then I got to see, because it might come back down and play all up and down here.
Okay.
And remember, it's finna be June. That's half the year already. Okay, so let's end this with anybody. If you got something else you want to look at, put it in the chat. It's 8:23. So that's what I would want to see. Let me see here. What in the world? I swiped that thing right off the screen. Can y'all still see my screen?
Yeah.
Oh boy, I tell you. All right, yeah. That's 15 minutes. So that's what I would want to see happen. I would definitely want to see that come down. It's in the pullback now. So if you did want to maybe try to get you a couple of pips out of it, now would be a good time to maybe try to go in for a buy. But I think overall, I'd wait. Yep, I want to see it come down, and then to come back down here and bounce up on that P like it did right here, that would be good. But you look at this zone right here, I mean, we already labeled that as one. So let me see here. Yeah, okay, so you see right there where it bounced off the P, that's P right there. So if it come down here and do a pullback, it could possibly go up. But once again, it's 824. So that's 2020. What did it do last night at 824? 24. 2020. Yep. About doing the same thing. Y'all see that? Last night around that same time, we was waiting on it to go up, and then pulled one of these on us. Y'all see that?
Yeah.
Mm-hmm.
So it's right around the same. It almost looked the exact same.
This pair is very respectful.
Yeah. That's why we traded. I mean, it moves slow enough. That's why we say this is a good one for beginners, man. Because even if it do go the opposite direction, it moves slow enough for you to just automatic or manually close it out. Okay. Somebody else got a pair in the chat? All right, guys. Well, I want to thank you all for coming on and having a good time with us. Those of you who are on YouTube, please feel free to look at the link below. Check out the website if you want to join this awesome team. And as always, we appreciate every last one of you all.
Thanks a lot, sir.
Thank you.
Thank you, sir.
Thank you.
Thank you, Apostle. Appreciate you.